Let's start with the basic. The company is not doing well. It's a Chinese stock. Let's look at the chart. Look at the volatility. Touch on the volatility smile. Look at the fundamental indicators, which can introduce some nuances due to its specific listing. NIO is a holding company which engages in the design, manufacture, and sale of electric vehicles. Its products include the EP9 supercar, and it provides users with home charging, Power Express valet services, and other power solutions, including access to public charging, access to power mobile charging trucks, and battery swapping. It also offers other value-added services such as service package, battery payment arrangement, and vehicle financing and license plate registration. Let's look at its financial indicators. The company is still unprofitable, with significant losses in operational profit, net profit, and profit before taxes. All these values are negative, and over the past year we've seen a decline in profit, indicating a decrease in profitability despite revenue growth. This naturally affects the stock price. Currently, its market capitalization is nearly $9 billion, earning around $8 billion, but still incurring significant losses. Additionally, all banks and investment funds are lowering their forecasts for this stock. Now let's talk about volatility. We see that volatility reached primarily due to the report released in early March. This high volatility was a result of the report. Then there was a decline, and now volatility is holding at around 75%. So in summary, the company is facing financial difficulties, leading to negative profitability indicators. This, combined with decreasing forecasts from financial institutions, has impacted its stock price. Additionally, there was a spike in volatility around the time of the March report release, but it has since stabilized at 75%. Let's compare the current volatility with historical volatility. We see that short-term historical volatility is much higher, while long-term implied volatility is much higher than historical. We're examining this because it can help us develop a very sound strategy for this company in the future. Again, the strategy will be risk-free. Now, let's look at the volatility smile. We can see that the short-term volatility is biased towards increases, and although the decrease was fairly smooth, further volatility is heavily skewed towards decreases. Therefore, traders are more inclined towards expecting a decrease in volatility. Volatility is low in the downside direction, which will also be helpful for us in the future. Now, let's examine the open interest. We can see that the volume in options is quite large. On the call options, the main volume is concentrated at the $10 level, while on the put options, the main volume is concentrated at the $5 level. Let's look at the option spread. We can see that the spread is very narrow, indicating liquidity, which is a very positive sign. Now, let's immediately look at the 3D volatility. Again, few people show you this, but I want to provide as much insight into the stock as possible. Professionals will understand immediately what's going on here, and this will definitely be used in crafting a further sound strategy. As we can see, the main growth was in 2021 when the stock almost grew by 7,000%. This is of course a lot, and at the moment it has dropped to its minimum values. Again, although the company seems to be developing, perhaps everyone knows such a chart, this is our mood in the stock market. As we can see, first we have a downturn, then a rapid growth and a peak, then a slight decline, a return to normalcy, and then we have a sharp decline. And as we can see, it actually acts roughly according to the same pattern. At first we had a sharp rise just by comparison. Look at this. Then we had a fall and a rebound from that fall. The same thing here, a fall, a rebound, and a continued gradual long decline. It continued, then there were some rebounds. Here too, there are some rebounds, and as we can see, we declined to a certain final point. The question is, where is this final point? Again, maybe the final point here is difficult for me to say, but you understand that sooner or later we always have positive times. That is, after a strong sell-off, sooner or later everything will return back to growth. Again, on the question of whether the stock will go up or down, I remind you of my philosophy that I do not know and cannot predict price movement. Anyone who says they know where the stock will go is simply lying to you. Here I can only make assumptions based on options. We have had quite a long consolidation, almost 3 months now, around $5, but again, there are no restrictions on further declines. Again, we can fall further, nothing prevents us. But again, the most important thing, my philosophy, is that it is necessary to manage positions and portfolios correctly and competently. Here, in principle, it doesn't matter where the price will go. If you build a competent portfolio through options, you will make money in any case. Now, I will deal with this. Let's try to develop some smart strategy through options, and I'll show you how it can work. I have developed a small strategy. Those who understand options will understand everything immediately. As we can see, the efficiency profile here is positive. That is, if the price remains in the same place, we will earn $1. Well, taking into account the commission, we will stay at 0. If the stock goes up, we will start earning. If the stock goes down, we will also earn well. If we slightly increase the position, then as we can see, the profit can be $2,000, $3,000. But again, if the stock goes sharply up or sharply down, we can incur losses. And most importantly, managing this position, the disclaimers warn, under no circumstances should you repeat the positions after me. You will definitely lose all your money. I guarantee it. If you do not understand options, you will definitely lose money. The most important thing here is management. To sell new options at the right moment, buy options, hedge old positions, reverse. That's what dynamic management is. You need to calculate delta hedging, also take gamma into account. All this is quite complicated. If you have any questions, be sure to write to me by email. I will help you build a competent position, a competent portfolio. This is regarding the position on this stock. This is exactly how money is made. That is, the main task is not to predict the movements, the price movements of the stock, but again, to build a competent position and a competent portfolio. Again, if we return to the market sentiment chart, sooner or later, in any case, a reversal will occur. As we can see, it should directly plunge into depression. Here, there should be a final rise with a volatility spike. The question is, can we call this candlestick, which was on March 5th? I can't tell you for sure about this candlestick because maybe we are only here. But again, sooner or later. If you look long-term, of course, it's much safer to buy a lot here because in the long run, the stock is promising. But again, you must never forget about the risks with listing because again, this is a Chinese company. And here too, you need to be careful. Honestly, I wouldn't allocate more than 10% of my portfolio to such companies no matter how much you want to. Yes, it can return to its values sooner or later. For example, to the maximum of $65. And again, from here, the growth could be very serious, up to 1,000%. But again, don't be greedy. Don't chase profit risks. In any case, I advise you to watch this video. The 5 most promising companies with huge profit potential. It will be very useful. Good luck to everyone.